What you say, people? Back with a bang. It's TWP here to bring you guys another video today. So in today's video, I'm going to be talking about my EMA strategy, how I use the exponential moving averages as an indicator to trade. So I'll be talking about entries, exits, how to spot reversals, when to cut losing trades, how to understand when a trade is breaking out, consolidation, all that kind of stuff. And just to clarify, I use this in conjunction with fundamental analysis, use this with news as well, so you can do the same. And I'll explain how I do this. I'll show it on TradingView, show you the actual indicator I use, the settings, all that kind of stuff. So I'd definitely say if you could, I'd appreciate if you drop a thumbs up. First of all, before we get into it, these videos do take time, of course, and the aim is just to help you continue learning, get better with trading, trade how I trade, and just learn a little bit more from me. So like I said, let's get straight into it. First thing I will do, jump onto TradingView, the usual. Similar to the last couple of videos I've done, I have TradingView up, I have Yahoo Finance, and you can also use CNBC, you can use Bloomberg, you can use whatever you prefer. But for trading itself and the actual indicators, you'll definitely want to use TradingView. You can also do this on the free version, so you don't need to pay a premium, you don't need to pay a fee to use this. So there's a reason I have Roblox on the screen. Just to start off with, first and foremost, before we talk about strategy, before we talk about indicators, before we talk about entries and exits on trades, everybody can see, I have the daily chart here, everyone can see where the trend is here, right? Everyone can see this is clearly bullish. It's going higher, making higher highs, higher lows, all that kind of stuff, right? We're seeing a lot of strong green bars. We're seeing a lot of positive movement. But the real question is, how do you catch these trades? Especially before they happen, especially before they break out. How do you catch them? And how do you know what to do with the trade? Sometimes you sort of pull back a little bit. Sometimes there was a couple of red days in a row. Would you still hold the trade? That's what we're really going to get into in today's video. So, like I said, if we start from the very, very beginning, I have an indicator here. It is called the multiple EMAs, 20, 50, 100. If we look at the settings for this, I have 9, 21, and 200. These are all different days or periods of days. The 9 is, 9-day period, 21 is 21-day period, and 200 is a 200-day period. So the green line here is the 9-day exponential moving average, the 9-day EMA. The orange line is a 21 EMA, and the red line is a 200 EMA. So in general, as you trade, you'll see that the red line, the 200 EMA, tends to be more a flat line, whereas the 9 and 21 tend to be steeper because they are shorter EMAs, so they have a much closer correlation with how price is moving on a day-to-day basis than the 200. The 200 is a 200-day moving average. It's calculating the average of 200 days, right? So it's a lot flatter. When you have smaller time frames like 9, 8, 21, 20, they will be a lot closer to price action, and you'll see a lot steeper patterns and steeper movement from the EMAs. So as I said, this strategy, what I'm going to be talking about in today's video, is what I use to enter my trades, catch trend changes. As you see, it was down and it went up, or even cut losing trades at times. So to start off with, if we're trading something to the upside, right, we're trading something which we think is going to go higher, we're trading calls. One thing you always want to see, and I'm going to highlight it here, is a strong green candle, a strong green bar. I've highlighted it here, right? So why have I gone all the way back to Wednesday, April 9th to highlight this strong green bar? Well, first and foremost, right? First and foremost, when you look at, what we're really trying to figure out here is, when does the trend change, right? Here, you see the trend was going down. It was going down, right? It was going down. You see the trend was kind of going down, right? From February 13th all the way to April 8th, April 9th. And then this strong green bar comes out of nowhere pretty much. Now, here you saw it was above the moving average. The price was above the 9, 21, and the 200. Great, that's bullish. Ignore my purple zone. That's there for a reason. Price came below the moving average. It started selling off, right? People, this is the thing. The moment price closed below the 200 moving average, it's now below all the moving averages. That is actually a bearish signal. So if someone wanted to take puts down here, it would have been understandable. If someone wanted to short Roblox here, it would have been understandable. But I've highlighted this big green bar, right? It's a strong green bar. So why have I highlighted this? Well, when you get a huge green bar like this, a big body close, and a big body close which is bigger than the previous candles, that's a bullish indication. So it's kind of like, all right, the stock is selling off, it's dropping off, and then hold your horses. Huge green bar, right? Big body close, not just wicks. Here there's wicks, here's wicks, long wicks. Here's a big body close. So you're like, okay, what's going on here? Let me wait. Now, another thing I want to highlight here, and I will zoom in a little bit more for you, is with this big green bar, right? So remember, with the red candle, we closed below the 200 moving average, bearish, right? With the green bar, we closed not only above the 200, but above the 9 as well. And we started to inch closer to the 21. So that's like, okay, I was looking at puts now. Now I'm just going to wait because I don't know, if it's puts, if it's calls, I'm going to wait. So what do? We wait. I'll remove this now. We wait. Next couple of days, a little bit indecisive. Red with a long wick, green, red. So it's, green days, red days. Now, a couple of things I want to highlight here. Couple strong green bars and closes above the 9 and 21. Not just that, we've got a cross here. This is what's called as a golden cross. I mentioned in one of my previous videos on how I swing trade, why this is important. So the golden cross, I'm going to mark it out we'll go with a circle. The golden cross, I'm going to change the color of the circle too, just because we're going to make it a little bit golden, right? The golden cross, that is when a lower moving average crosses to the upside of a higher moving average. Remember, the 9 is our low moving average, the 21 is our higher moving average. The golden cross, the green crossed above the orange, the 9 crossed above the 21. That is a bullish indicator. Now, adding to this situation, the fact that we got a couple strong green bars, but not just that, we've closed above the crossover now. That's a bullish indication. So this is potentially a point to go long. Now, some people might say, well, last time we thought it was an opportunity to short the stock, to go short, and then we got a reversal. This time, who's to say that it doesn't happen again, but reverse to the downside? Nothing wrong with that. Wait, let it break out and come back to test moving average. We got the breakout. There we go. Gapped up, strong green bars again, outside bar, consolidation. Now, this is the point where you say, okay, it could be reversing back to go to the downside. Potentially, yes, it could be reversing. So we wait. What do we see? Well, I've highlighted the zone here. We've got two doji candles, very long wicks, right? Indecisive price action, but potentially a breakout is coming. We've got a strong green candle, which closed above the moving average, but also we got a bounce on the moving average with the price. We got a bounce on the 9-day moving average with the price. That's why this orange circle is here. This orange circle is a potential spot to enter calls. Why? Again, we come back. Point number 1, we've got the consistent green candles, strong closes. Point number 2, price is holding above the moving averages now. And point number 3, we got the golden cross, the 9 crossing above the 21. So that's a bullish indication. Now, we're waiting for price to come and test the moving average. Remember, this is an EMA strategy, so we're going to use the EMAs in regards to price action. Price came down to test the moving average, shot out, right? Okay, you might have missed that entry. Fine. It pulls back to touch moving average again. Now you know, hey, we're in a bullish trend, right? From the 14th of April all the way to the 2nd of May, a few weeks now, we're in a bullish trend. Once price comes back down, this is our entry spot again. Why? We wicked off the moving average on the daily time frame. Once again, we push up, we can consolidate, we break out again, come back to test moving average, break out again. Now, I have about 3-4 lines here, which are my resistance points. As you can see, Roblox consistently broke past my resistance points. Even when it consolidated and came back to test moving average, it completely broke out. That's why it's also important to have price targets, right? If you use support and resistance with this method with EMAs, that's more than enough. Some people like to add on the RSI to gauge, where price could go. Some people like to use the MACD as well to gauge where price would go and also just view volume. Nothing wrong with that. But if you use simple support and resistance along with the moving averages, which is what I mainly like to do, this strategy does work a good amount, a good percentage of times, So once again, you look at the chart, right? Before we even get up to the 80s, you're seeing we broke out, above the golden cross. We consolidated, came back to test moving average, broke out, came back to test moving averages, broke out again. All of these are bullish signals. Now, you never know, right, when the reversal could happen, but we have the moving averages to gauge where price is likely to go. And of course, we don't know it's guaranteed. It's not guaranteed. But when you see it consistently doing the same thing, the trend is not only upwards, but you see price action consistently pulling back to go higher. Then you've got, the swing lows here. You've got the swing lows. You've got the swing lows to get into the trade, right? You've seen the strong green bars. Look, strong green bar here, strong green bar there, strong. All the green bars are much bigger than the red bars, right? So when sellers are stepping in, they're not strong enough, right? It's got a lot of wicks, fine, wicks again. Nothing wrong with that. But we're seeing strong green bars. We're seeing big body closes and not just wicks, right? When the big green bars are bigger than the previous red candles, that's bullish. And these are the kind of things you'll learn, as you go along. And as I said, you can combine this with patterns, with your support and resistance, with news, fundamental analysis, whatever it may be. So I'm going to zoom all the way out now to see where Roblox is today. And what do you notice about it from the golden cross, 21st of April until today, 13th, or well, yesterday was the 13th of June, but we're on the weekend right here. Price never closed below the 9-day moving average. It consistently held above the moving averages. So one thing you'll learn when you trade, and I'm going to pick up a different stock now, Exxon. One thing you learn when you trade is, price can do one of three things. It can go sideways, it can go up, it can go down, right? Here, it was kind of going up, kind of going down, kind of really sideways, to be honest. But this is one thing I want to highlight because obviously yesterday, or from Thursday into Friday, this week we swung trade Exxon calls. If you are following me on Twitter or Threads, you would have seen that we did take this as a swing trade. If you're in the Discord, obviously you did take the trade with us because it was called out. So I have the green, the orange, and the 200 right there. Now price, last couple of days, is now above all those moving averages. That's a bullish sign, right? And once at the beginning of the video, I told you, once you see the red pretty flat and the green and the orange to the upside, you kind of know what's expected to happen, right? When the 200-day moving average is flat, that's fine. When you see price above all three indicators, all three moving averages, that is bullish, right? So, and vice versa for below, right? Here, price was below the 9, the 21, and the 200. Price was way below, which is bearish. Now, here we had, I have my resistance line at 104.85 and my support at 101.72. We consolidated in here for about two weeks pretty much. We now broke out as well as seeing the golden cross. What does that mean? Opportunity to swing calls. Once again, if you're in the Discord, you saw the tab which said swing trade ideas. Exxon was in there, right? Exxon now breaking out, which is why we were able to swing trade this, and it brought back 155% or 180% returns, whatever it was. This is what I'm talking about. This is why I like trading using the moving averages, right? It's not always 100% guaranteed, but more often than not, this strategy does work, and it's just simple, but it's also effective. So if we look at Exxon again, right? From, we'll say, May 12th to, we'll say, Friday the 6th of June, it was very clearly bearish. Why? One, red candles were a lot stronger than the green candles. Two, price was below all three moving averages. At first it was just below the 200, then we got the death cross and it crossed below the 9 and 21. And then three, you can see that, overall, this had been in a downtrend, right? We had gapped down, came back up, came down again, came back up, came down. It was struggling to break out. Now, in the last 5 trading days, it started to push. We got a nice close. This is why I say you can use this pattern to spot reversals. Again, nothing wrong with getting inputs here if you think it's going down. The moment you see price the next day close above the 9 and 21, that should be an indication to get out of puts and start looking at calls. Once you see the next day price closed above the 9 and the 21, and you see the golden cross occurring as well, it's a very strong indication to get calls. So you don't need to buy something just because it's near the 9 or 21. That's not really how we're trading. We're trying to trade based on what we think, or what the moving averages are showing us price could do. So again, 9 and 21 crossing to the upside. Great. Price closing right above, great. Price coming to test, which is what the wicks are. Price coming to test moving averages. But we're closing above, consistently. We're closing above with a strong close. Again, when you see this kind of action, price action, you should know, okay, could a breakout be coming? Yes, it could be steady. It could be a gap up. Either way, it looks like we are starting to break towards the upside. And again, the first jump, the first gap up, price is now at 106, 107, whatever. You think, oh, I've missed it. Next gap up, you're thinking, I missed it. You see now that we close above the 200. Actually, no, you haven't missed it. We're just getting started, right? And now people are going to say, well, the war news with Israel, with Iran, that's, what's affecting this stock because it's oil. Again, what did I say at the beginning of the video? You combine this with the use of fundamental analysis. You combine this with the use of news, right? So the news is also in the charts, which is why I say you combine this method with the EMAs with the news. That news was, a catalyst for this huge gap up. But the chart was already saying this is bullish, this is starting to climb up anyway, right? That's why we were able to swing calls. So again, flat 200 EMA, completely normal. Rising 21 and 9, great. That is bullish. And, price consistently holding above, that's great. That's what we want to see. If we saw a pullback, nothing to be worried about. If we saw a pullback and the pullback closes below the moving averages, you might have a little bit of concern. If you see a pullback and it doesn't close below, nothing to be worried about, right? Like I said with Roblox, every pullback, nothing to be worried about. Every pullback came to the moving averages, didn't close below, nothing to be worried about. And this goes for a lot of different stocks, no matter what you're trading, right? If I pick up PayPal, here we go. So first and foremost, you see here, and this might even be better on the weekly chart. Slightly better on the weekly chart, right? So I've got those three blue, light blue, actually no, I like the daily chart better for this. So I got the three light blue, these that I've drawn. You can call them U's, you can call them, whatever you want to call them, bows. It's an inverse head and shoulders, which is a bullish pattern. Again, we're using the moving averages with patterns, with news, with fundamental analysis, but it's an inverse head and shoulders that we've drawn on daily chart. Okay, cool. Right here, I have support level at 57.40. I have resistance at 64.14. Whatever happened on the 9th of April, I believe it was Liberation Day when Trump was announcing taxes. PayPal shot up to my level of resistance and came back down. Okay, cool. Again, if it's not clear, we're not taking the trade. But what happened on this day? May 1st, April 30th. Green moving average crossed above the orange moving average. Golden cross. It means it's time to get active, people. It's time to start looking at calls. If you weren't sure what's happening here, huge green bar, bullish, yeah, but it's in a downtrend below the moving averages. Okay, is it bearish? We're not sure. Okay, we wait. We don't have to trade it. We just wait. Oh, wait, the moving averages are now crossing to the upside a couple weeks later. Guess what? That's a bullish indication. And what started to happen? We broke above my next level of support. Resistance / support here. We broke above. We went to test the 200 moving average. Remember, the 200 moving average is normally flat. It is flat here, and we got rejected by the 200 moving average. Okay, cool. But before that, we had, a run from 64 up to 73, a $9 run, right? That's more than a 10% run. Now we got some consolidation. That's fine. You don't need to trade the consolidation. If it's struggling to break above the 200 moving average, you see the body closing below, the wicks going above a lot, price touching the 200 moving average but failing to break above. All right, maybe the calls are no longer in play. We wait. Is it puts? No, because we're still holding above the 9 and the 21 in this case. So we wait. Price, it didn't really it didn't really break below the moving averages. It didn't really break below and hold below. Price kind of hung in and around the moving averages. Started to break out this week, and then obviously got rejected just above my level of resistance before it came back down. That's fine. If you were able to catch this, nothing wrong with that. But again, you're probably thinking when this breaks out, you're getting rejected by the red line here, by the 200 moving average. So you're probably not taking calls. But actually, if you scroll left and we watch what happened last time, we went to test the 200, failed to break above, consolidated, came back down. This time, we actually broke above and continued higher. So actually, this part when we broke above, came down to test again, went higher, would have been nice for calls. It would have been, just a $2 move, but it's still a move, right? Especially when you're swing trading. Now, I want to show you warm up, right? Warm up is starting to break down. So how do you catch a reversal, right, with the moving averages? Well, what did I say when the green crossed above the orange towards the upside? It was a golden cross. Now, what happens when that happens to the downside? That's a death cross. It's a bearish indication. The green, which is the 9-day moving average, crossing below the orange, which is a 21-day moving average, it's bearish. Not only that, here you see huge red candles, and you see price pretty much topped out over here, right? Look at the long wicks. They were trying to push this down. The body is small. The green body is small. It's not like this, which was really bullish, which was a really strong body. These are small bodies. So, right, the green candle is a small body here. Now, big red body candle. Okay, another big red candle. Now, when we did have a green day, both green days, small bodies, long wicks. That means they're trying to push price down, but it's just managing to hold. It's just managing to hold it. It's ready to, it's weak, right? The bodies are not strong. The stock price action is weak, right? The sellers are really starting to gain control. Next day, no surprise, Wednesday, 11th, huge red candle, right? Huge red candle. And now you see, price is starting to come down to my level of support. It's going to probably come and touch my next level of support, 91.84, unless it finds, a level to hold anywhere near here. But it's almost in no man's land here, right? Because if you remove my white level of support, right, if we do this, we're pretty much in no man's land, right? The moving average is crossing to the downside. We're just selling off. We probably come in to touch either my level of support or, the moving average all the way down at 88. So that's kind of showing you what to expect, in the next couple of days from Walmart. Look at the weekly chart, though. This is why you need to have eyes on multiple different time frames. The weekly chart, it's weak, but it wicked off the 21-day moving average. And it closed just below the 9, but it wicked off the 21. If this had closed below the 21, it'd probably really get nasty. It closed above the 21, but below the 9. So we're still going to wait, because it might hold here and come back up. But more likely, which is what I think is going to happen, it's going to come all the way down. We get this upcoming week. If we get a close below the 21, then yeah, it's probably going to be looking real bleak for Walmart in this case. So once again, if I pick out, let's say, I'll go with, we can go with Tesla. This is a popular stock, right? Weekly chart, we're strong. Moving averages crossing to the upside. And now we're at the point where, you've seen a reversal up here with Gravestone Doji. You've seen us come test the zone, come back down. Okay, that's what the weekly is doing. The daily, all right, well, we were breaking above the moving averages. Moving averages were diverging. Now they've crossed. Now they're kind of hanging in around each other. It's not the clearest price action. If you're trading with using moving averages, this is not the clearest price action. And one thing I'd said earlier was, you're not always going to see your setup. So that's fine, right? You don't have to take the trade if your trigger point, your entry point is not clear. Here, your trigger point was clear. Why? Price, well, first of all, price, you saw the golden cross here, but in and around here, price broke above all three moving averages, the 9, the 21, and the 200. That was clear. Here now, we're not really sure what's going on. We got a close below, we got a close above, And this is why I say when we use moving averages, you never know exactly what will happen. You can only put yourselves in a position to anticipate what is likely to happen, right? Sometimes you're going to have to wait for the trade to pan out. This might be more of a day trade for you guys right now. And I think it really is. But let me see if I can pick out another stock. Apple. So Apple, I'm actually swing trading Apple right now with the Discord. We're swinging puts. Why? So price is below all three moving averages, the 9, 21, and 200, right? If we get, we've had a couple, tests of the moving average and we've broken down. Now I think we're coming to my level of support. Again, you're combining this, moving averages strategy with support and resistance. The moving averages, we got the def cross back here. It wasn't a nasty one, but it was still a def cross. Price came down. We pushed up, got rejected. Looks like we could be coming down further. You do have to watch out though, because it could hold at my level of support like it did last time, right? Last time, price came all the way down to my level of support, closed above it, and started uptrending again towards the moving averages. Now, once we got to the moving averages, we didn't break above properly, so we were still in a range / leaning bearish. And again, this is a decent setup for puts. You won't always see a great setup for puts, but this is a decent setup for puts. Look at Abercrombie and Fitch, not fish, no sardines. Now, you see here, price coming below the moving averages. What did we say? We combined this with news and everything. Obviously, the reason it gapped up here, it had earnings. Great. Huge red candle, clearly bearish. Didn't break above the 200 moving average, clearly bearish. Coming down, right? Hanging in and around the moving averages. Goes up, breaks above. All right, we're like, okay, wait. Is it back to being bullish? Potentially. Let's see what happens when it retests the moving averages. When it retested, sellers were starting to gain control. Red candle, huge red candle. Okay, moving average is about to cross to the downside. We're about to flip bearish again. Once it starts breaking below and selling off, it's pretty much going to happen. We're going to start coming down to $72 level where we previously were before, coming down lower, below 70s, so on and so forth. So that's pretty self-explanatory, for puts, for calls. Sometimes people will try and, get in on calls early. It's not really necessary because at some price points, you're honestly just buying falling knives. Sometimes that's just what it is, If you look at this stock, Micron, this is a beautiful chart, right? Why would I not trade Micron? Why would I not trade Micron when it's beautiful it's in a beautiful uptrend? Why would I trade Abercrombie and Fitch to the upside? People trying to get in calls because they think they can get price. They think it's found support and it's ready to go back up when it's below all the moving averages, right? When you've got Micron stock right here above all the moving averages, beautifully uptrending, beautifully, breaking out and, making higher highs, higher lows, obviously breaking past all these levels of resistance every time. Very nice, very smooth chart, right? 6 green days in a row, weekly chart, back to back, strong green weeks. We've got a golden cross to the upside with the weekly chart. Daily chart, moving averages are diverging. Great to see. Consistently uptrending again. And when you look at these kind of stocks, the only red day in the past 2 weeks, the only red day was not a bad red day, right? The candle is mainly wicks. The body is very small. It's mainly wicks, so okay, it's not strong enough. Following day followed by an inverted hammer candle, and guess what? Yep, price continued to the upside. So, like I said, you don't just buy something because Abercrombie & Fitch because it's near the moving averages and you say, okay, it's going to go to the upside. That's not necessarily how it goes. It could just be starting to sell off, right? If you want to catch trend changes, then you wait for a confirmation of a reversal to the upside. If you want to catch trend changes, then you just wait for it to find a solid level of support, wait for price to start closing above the moving averages and get strong green candles. You really don't want to try and trade this to the upside while it's below all the moving averages. That's not the time to do it. You're just going to enter a trade which is probably going to sell off a little bit. And again, there's better setups out there. There's smoother setups out there. Micron is one right now. Roblox is another right now. These are ones where you see a clear pattern, you see a clear trend. You're not trying to catch something which is just gonna mess up your trading portfolio. Sorry, mess up your portfolio, mess up your trading, all that kind of stuff. And then the last thing I'd say in regards to this is, with all of these trades, you want to see consistency. Here is pure consistency. Here is pure consistency. Here we're now starting to see consistency. Here, not much consistency. Down 1 week, up the next week, down a couple of days, up the next day. That's not clear consistency, right? And yeah, with Micron, the trade might start going this way, but then you can cut the trade when it breaks below the moving averages. With Roblox, sure, it's up so high, it might start coming down this way, But then you can cut your trade, cut your calls. If it starts breaking below the moving averages, it starts going towards, the next moving average, so on and so forth. So yeah, combine this strategy with the use of patterns. If you can spot a double bottom, a triple top, combine it with that. If you find different bits of news which could affect the stock, how it moves, then like CoreWeave, then combine this strategy with that, right? But until then, trade the chart, trade the price action, trade what you see. CoreWeave consistently up, sure, red day here, but came back the next couple of days, couple red days, strong red candle. You might think, okay, it's reversal time, it's coming down. Price never broke below the moving average. It's not time for puts yet. If you caught it on a day trade, that's fine, well done, you caught it towards the moving average. Following day, price, you saw price held above the moving average, closed above the moving average, and we're back to the consistent uptrend, right? The weekly chart will tell you a lot clearly. 1, 2, 3, 4, 5, 6, 7 green weeks in a row, and now we've just got we've had a red week, but again, big wicks. So there's still, its price is still bullish, I'd say, and you just got to wait for it to come down further before you even look at puts. So I hope you guys did enjoy that video. Hopefully you guys do understand a little bit more about the EMAs now, how I use them, what to look for, how you can use this in collaboration with other strategies. And of course, it doesn't work 100% of the time. There are going to be times you get caught in false breakouts. Sometimes it's going to be consolidation. Sometimes the trade is just not going to pan out. Sometimes the trade is going to take longer to pan out, that kind of stuff. But obviously, it's never going to work every single time. That's just unrealistic. It's just a strategy, something we can use to trade, of course. And like I said at the beginning of the video, if you guys enjoyed it, drop a thumbs up. Also share it with a friend, a family member, anyone else who's trying to get into trading. Put other people on, share with them, the blessings that we have in front of us, share with them the opportunities we have in front of us. And then of course, you guys know, join the Discord if you're not already in Discord. We do study sessions like this where it's more interactive. You can ask questions, that kind of stuff. Also, make sure to check out the stock option starter pack. That's 10 different videos you'll have access to for life. The link is in the second link in the description. And of course, that's more specifically options based. Whereas this, you can use it for options, for swing trading, for penny stocks, for crypto, forex, all that kind of stuff. But overall, I hope you guys did enjoy the video. We'll see you guys next time for another video. I got to be making, you got to be making. See you guys next time for another video. Peace.